Hi, good afternoon, ladies and gentlemen. This is Sinarco Global Trading in London. Uh, the euro again today. Sorry about that, but we will presage it with a sort of brief, broader look apropos of the IMF uh, various tomes that have come out in the last couple of days, just to paint really a picture of how bad the Eurozone is. Happily for us, not that we forecast things, of course, but if we were, then what we mentioned regarding the euro yesterday and the day before and the day before that and for months, it's absolutely correct. It has come off. As you can see, this is against the dollar, so it is on a downtrend. There's some bids currently in the market. They're at the 128 50 60 level, but nonetheless, overall trend at the moment is looking a bit bearish. Now, nice to get vindication from other people every now and again when those people are the IMF. As we've been saying for a long time, the Eurozone is a disaster, wrapped in a catastrophe, disguised as an utter mysterious bad thing, to paraphrase the words of Winston Churchill about Russia. Um, the IMF entirely agrees with our view on this. Quote, the Eurozone poses the single biggest threat to world financial stability for the foreseeable future. Now, that is saying something, the single biggest threat. So let's have a look at that. This is compared to the slowdown in growth in China to kick off with. Now, here we've seen a number of reductions on GDP growth targets for this year from over 8%, if you remember a while back, sort of 8.5, 8.3, 8.7, to the current 7.5%, which will be met, of course, no matter what. Now, this will occur even despite the apparently extremely questionable state of the country's banking system, which we've highlighted in an article, which we diplomatically called, and apologies to any Chinese chefs that we know out there, cooking the books China style, all variations thereof. Not that we're suggesting, of course, the government is in any way doing anything untoward, although they might be. In fact, PwC, the esteemed accounting firm, recently published a report. I'll be very careful what I say here, but it seemed to point out that overdue loans at China's top 10 banks had increased by over 300% in the first 6 months of this year to around, well, it's just under 500 billion won, which is about 78 billion dollars. Clearly, given the stuttering state of the country's economy, this is a lot. It's a lot more likely that the mountain of loans will increase. That estimate, I would assume, is probably to the low side, and that as growth sort of grinds slower, the level of non-performing loans within the total banking system in China will increase, despite the highly creative way in which they're dealing with the figures. Nonetheless, China will, as we've said, achieve its GDP target of 7.5% in 2012, or heads will roll. Usually, of course, you use this phrase somewhat figuratively, but in the case of China, I wouldn't be quite so sure. Might be a more literal interpretation that they've got over there. Now, that's number one. So just to reiterate, the Eurozone crisis is worse than that, and that is clearly saying something. Um, so moving further forward, we've got the US fiscal cliff. Now, the US fiscal cliff is, of course, a decision that's going to have to be made by the beginning of this coming year, and whether to extend a range of tax cuts and spending increases with the aim of boosting growth, but with the corollary effect of adding to the US's massive debt mountain. The other decision that they could make is to continue with these tax allowances and sorry, is to cut them. Is to cut the tax threshold available and get rid of the spending increases, and that would lead to a massive downturn in the US economy, which of course is just about beginning to get back on track. In fact, the Office for Budget Control in the States, US Congress Budget Office has said that this would lead to a 2.9% fall in US GDP in the first half of next year, before growing at 1.9% in the second half, so a net reduction overall, which would push unemployment back above the well above the 8% level. It dropped to 7.8% recently, which was a nice downturn in that, and it may even push it back up to 9%. Those are the words of the Congress Budget Office, not mine. So again, just to reiterate, the Eurozone crisis is even worse than that. So the IMF has said that confidence, this is a direct quote, in their marvellous Global Financial Stability Report, October 2012, confidence has not yet been sufficiently restored and concerns about financial stability in the euro area remain elevated. The tail risk concerns, again from the IMF, the tail risk concerns surrounding currency redenomination continuing to fuel both a flight to notionally safe assets and retrenchment of cross-border capital. So what that actually means in non-diplomatic speak is that when the subjugated denizens of Greece and Spain straight off, and Italy down the line, and Portugal's in a better state now, as is Ireland. But when the denizens finally realise that they haven't a hope in hell of, but they've got two choices again: either run with the austerity measures, in which case everybody will be living in caves and eating leaves and watching their children die, or not run with the austerity measures, in which case they get no money. There is a third option, happily, which is do away with the euro entirely and go back to the drachma. There will be a slight problem in the short term with that, but that is really a problem for banks, foreign banks holding Greek debt, which is denominated in euros, because they'll have their debt devalued. Oh dear, what a shame. Never mind. But longer term, this idea, this whole concept that leaving fixed currency mechanisms is a bad thing. You only have to look back to when the UK left the ERM. There was a slight problem with that. It was only a shadow mechanism, that is for sure, but nonetheless, we prospered, clearly. Now, coming back to the euro, as I say, we just put in a couple of lines here, support lines. This is a key level, 128, yeah, 128.05, 128.04. So a break there, you would be looking, there's support all the way down from lunatics who actually bought it in the first place. So you would expect stops to be triggered, lots of stops between here and here, and more stops here, and you can see there'll be quite a lot of stops around this area. Here in particular, as you see, there's ongoing support there. It's people trying to protect their downside. So we'll leave you with that thought. Ladies and gents, have a good day and happy trading. Or rather, have a happy day and good trading. It's probably a better way of putting it. Cheerio.